The Economy 4.0, Crypto as a New Financial Paradigm for the Internet. Moderated by Jarek Bialek, Revenue Capital LLC.
Okay, so the topic is Economy 4.0. My name is Jarek, I'm the CEO of Revenue Capital. We provide funding and Web3 fundraising solutions. I'm going to allow our panelists to introduce themselves by themselves, though. So, in your own words, Josipa.
Josipa Majic, Predin. I'm co-founder at Revuto. We're a subscription management company. We deal with issuing virtual debit cards and allowing you to pay for your subscriptions with crypto.
Hello, my name is Filip Cristian. I'm the CEO of Filip Capital. It's an investment fund for crypto startups, and in the same time, I'm the CEO of FutureCoin that provide a blockchain solution to all the cryptocurrencies in the industry. Basically, it's a multi-virtual machine compatible blockchain, so any developers around the world can create any smart contracts on our technology.
Hi guys, my name is Lukas. I'm the co-founder of Rosy Whale, and essentially Rosy Whale is a risk management solution. It allows users to earn income passively while they sleep.
Hey guys, my name is Mihail. I'm a founder of VoltaPay, Maltese EMI, which specializes in high-risk industries and has crypto and blockchain embedded with the fiat solution.
All right, thank you guys. So, obviously, Web3, Economy 4.0, I mean, it's a super vast topic. So let's try to demystify some things first. So maybe starting from the end, Mihail,
Yep.
Basically, what are the core foundations or the core values of Economy 4.0 in your perspective?
Yeah, for Economy 4.0, if we look what's happening in the financial industry today, we tend to see the aspects of the financial industries as just additions to the bank. For example, if we take blockchain or the simple smartphone, the blockchain, we tend to see it as extended data to the bank. Or the smartphone, we see it as some sort of a channel between the bank and the customer, you know? And the core foundations of the Economy 4.0 is to embed all these technologies into the everyday life of the clients, you know? Not to see them as a separate connection, but more to see it as utility. You know, because the core values of 4.0 is low friction and immediacy, meaning we are searching for fast responses, immediate responses, and the way that we are looking for that is only one thing: utility. You know, we try to differentiate ourselves from the products, for example, the banking products as an institution. And we tend to see it more as the utility that the bank provides, you know. Basically that is it, you know.
Okay, let's build on top of that a little bit. So if we agree that crypto is the fuel of Economy 4.0, you might not agree, but let's assume so. So what is the state of crypto, Josipa? If you can develop that topic a bit.
Sure. So the state of crypto, broad question, but I can kind of, I'll do my best to answer it. I think we're kind of in a phase where we have a lot of good stuff going on for ourselves. I would say the awareness is the highest that it's ever been. I think we heard on the previous panels, we have big institutional investors and hedge funds looking to enter into crypto. So kind of the limelight of the world is all headed towards crypto. Now the question is, what do we do with it? I think in this entire scheme, what has happened is that we still have a lot of bad apples. We still have a lot of companies that we know are not so good. We kind of, pretend that we don't see them. We keep them around, but in reality, I think they bring a lot of bad reputation to the sector as a whole. And that's quite unfortunate because we don't see all of the good stuff past it. I would say one of the really big opportunities for crypto is, apart from building a parallel financial system, is really entering all of the mainstream use cases. I think on one of the earlier panels we talked about how important it is to incentivize everyone within any ecosystem. And what crypto does is a clean, simple solution to do just that. And I think we're now in a space where everyone is looking in our direction for some answers. They want some solutions. And now it's really up to us to be introspective enough to kind of say that we want to distance ourselves from these bad apples and we want to move the sector forward. I think one of the big things that still is quite nowhere, to be frank, is regulation. We have situations where, for example, in the US, they've essentially checked themselves out of the regulatory game. So they don't want to participate. They're in this witch hunt that is ongoing, which is quite unfortunate. So I would say kind of all in all, crypto, we have a lot of good stuff going on for ourselves. We're really on the map for all of the big institutional investors and all of the big players. The smartest developers and the smartest people in the world are mostly working on Web3 and crypto projects. But the regulatory bit and just alienating ourselves from the bad apples are still things that we need to push forward.
All right. So you mentioned the big players. Flipping the table a little bit. What opportunities crypto bring to the regular people then? Maybe Lukas, you'd like to develop on that a bit.
Sure. So I would say the investment opportunity, right? Because look, what crypto represents is it's a hugely volatile market. And if you know how to use this volatility to your advantage, you can be really good, well off. If you know how to use market inefficiencies and produce income for yourself, that's essentially a huge advantage of using cryptocurrencies. So investments would be my favorite part on how you can actually take advantage of cryptocurrencies.
Okay. And what's the perspective of that from the traditional bank's perspective? That's actually one of my favorite topics. Filip, maybe you'd like to expand that a little bit.
So a lot of people think of Bitcoin being the new cryptocurrency for the world, and in my opinion, this is a globalized perspective. I like to think that Bitcoin and other cryptocurrencies can be an alternative, not a replacement. So when you talk about traditional banks and the investment opportunity that crypto market offer to everyone, I like to say that a lot of traditional banks are already in crypto, but silent. But they are in crypto. And what's the huge advantage is that it's very like startup field. A lot of companies they are going to develop a lot of products and platforms in the crypto market. And the blockchain industry, that in my opinion will be more than $10 trillion market segment, if we are looking at the stock market, for example. I like to make this comparison on stock market and crypto market being almost the same thing when we talk about investment, even for traditional banks. So in the stock market, an ETF for Bitcoin, it's very welcome, and with an ETF open, any traditional bank can really invest in Bitcoin if they don't really want to hold Bitcoin, because it's more risky to hold Bitcoin than stocks because of the security issue. So you need, for example, a cold wallet or a hot wallet. Maybe people don't understand what a cold wallet means or a hot wallet means. So a hot wallet is connected to the internet, right? So you can have a Chrome extension or a mobile application when you can hold your cryptos based on your keys. At the beginning, there were no secret phrase. It was a very, very large pin with 194 letters. But in the meantime, they create just 12 words or 24 words. And the cold wallet is not connected to the internet. So the big traditional banks, the big companies like Tesla and others, they invest in Bitcoin or hold their Bitcoin on a cold wallet with multiple signature assignment. So this is what I think traditional banks are afraid, some of them, because like I said, there are already traditional banks in the crypto field. Because of the volatility, the regulation, that is a very big problem, a lot of rug pulls, a lot of liquidity problems around the world. And because they don't really know or understand how to hold their Bitcoins in a safe position.
Right. So we're touching here a quite interesting and then again, wide topic. And I'm going to ask about mass adoption, because obviously we've discussed technology, we've discussed that perspective, which obviously is very interesting for the big players, very interesting for individuals, small ones as well. Now, what needs to happen so that we start seeing, a move towards mass adoption? Josipa.
Yeah, I think that's an excellent topic, and I don't think it's widely enough discussed. So in the past couple of bull cycles, what was really profitable is crypto developers building for crypto audiences. So these are really niche products with, clunky user experience, but the money was so good and the audience was there, so, why not do it? I think one of the main benefits of that is that we get a lot of radical technological innovation from it. But the big opportunity for crypto is how do we go beyond that? How do we start solving real world problems for real people on the street who don't care what's behind it? And kind of in fintech, we have this interesting concept of embedded finance, which is, you just want to pay for stuff. You don't care what's behind it. You don't have, you don't know how the back-end stuff is being done, and you don't care. It's all hidden behind the simple, nice user interface. And I think that's the really big opportunity for crypto. Can we hide all of the, unnecessary stuff, and can we just present the utility to the end user in a simple and clean user interface? And that simple and clean user interface on a real-world problem is something that I think is widely discussed, but really very rarely happens. And if you talk to a random attendee at this conference, if you ask them what's a real world problem being solved with crypto or on blockchain with a good user experience, I don't think they'll have a lot of company names in their head. So I would say the really big mass adoption is just that. Let's try to address kind of real world problems.
I think you hit the nail in the head with that. Stopping a little bit at the concept of usability, because that's probably one of those key aspects when it comes to the way towards mass adoption. Mihail, can you maybe help us to understand and develop a little bit of the topic of the first principle design? What role it can play in this respect?
Yes, as Josipa already mentioned, that the client's biggest utility is their trust in the bank. Yep. And so as technology grows, the whole banking concept is necessarily to be changed, So here we're sort of forced to rethink the way that we bank in the world, We cannot use e-commerce economy 4.0 and just stick it on the usual bank. We have to rethink the whole structure. And this is actually the first principle design thinking. How to restructure everything from the beginning, embedding the new technology, and how to actually execute this mission. So here comes the question from the banking perspective: are we going to lose the jobs? No, because everything is technologically improved. As Goldman Sachs, for example, what they said now with every 5 brokers we can change them with 2 programmers. So the answer to this question is that we have to progress with thinking, and we have to progress with the first principle design, and to find our way in that world.
Okay, so we have the problem solution matchmaking, we have the UI UX approach.
Exactly. Yes.
Lukas, maybe you can develop a bit on the risk aspect, because that's also something which is somewhere at the back of our heads when we think crypto, Web3. What's your take on managing risk when it comes to dealing with the crypto assets?
Yeah, so just building on top of what was just said, right, regarding the design thing, and then I will go to the risk part just later on. So look, the issues are, we have a centralized finance, right, and everybody understands centralized finance in a quite simple way, right? We have borrowing, we have lending, we have, let's say, some API, and we're able to get some returns. Now, let's say a retail user goes to a DeFi protocol, a decentralized finance website, and wants to invest in some investment products, right? What he usually sees, first of all, he has to connect with the MetaMask. That's the first issue, right? As you mentioned before, it's difficult to understand, and people are not even aware what are the risks when I connect this website with my MetaMask. Maybe here we can have a lot of risks, right? Now, the second issue is that a user is usually provided with a few menu items like staking or liquidity pools. And again, what's that, right? Majority of the people cannot even answer this question: what is staking, what is liquidity providing, right? Because they simply don't know, and they don't know what are the risks related to those financial tools. So design must be improved, and both from a just simple UX perspective and also from technical. Second, people have to know what are the risks, right? And every single financial product in the crypto industry has different risks, so it's difficult to speak broadly about risk, but first of all, people must understand what they're investing, right? And if they understand what they're investing, then they must be presented with, okay, what are the risks of this investment opportunity, right? And yeah, that's my take on it.
Okay, let's flip the table again. So we were talking about adoption from the big players' perspective, from the small players, meaning individuals. I'd like to talk about investors a little bit. So like, the special breed of the players here. Filip, maybe you can just tell us a little bit about, what Web3 investors should look into when it comes to making investment decisions, in this environment.
Yes, so a very big problem for the investors are the projects, the number of projects that appears every day in the space, because everybody in maybe 10 minutes, 15 minutes, they can create a token. 1-2 days you can create a website, launch on the public and say, hey, this is my idea, this is what I want to do. And when you look into a project, you need to focus yourself in seven stages. So first of all is the team behind it. You need to verify the team. You need to see that the team is real, their experience, and where they worked before. The second of all, you need to ask for a GitHub, for example, or if they say they make a platform, you need to check all the updates, what's the technical issue they solve with the project, because I think every investors know they need to invest in something that solve a problem worldwide. There you want to put your money in. So if a project is like another copy project of Shiba Inu or other project, I don't think it's worth your money. So you need to make your information regarding their utility in the space. Another aspect is very important. It's the project you want to invest in need to have a security audit from Certic on other security companies, because they have a lot of honeypots or a lot of codes in their smart contract if it's a token, or in their blockchain code if it's a blockchain Web3 protocol, and you need to know about that. A fun fact is that when you talk about traditional banks are not open for the weekend. Bitcoin never closed. So I think this is why investors really want to look into crypto projects. And if we flip the table, they are looking on decentralization. So if I want to send $1 million to you, I don't think it's quite okay someone to ask me where the money are, or why I want to send you, or even to block my transaction. So they can hold my money. And when an investor is early stage on a project, they are looking on what type of rewards they can enjoy being an early adopter. For example, staking, like he said. Staking, there are two ways of staking. When you talk about a token, this is not a real staking, because you are rewarded because you lock your tokens. So the story is like this. I give you more tokens because you don't sell. When we talk about real blockchain, layer 1, in general, they are proof of stake concepts. So you are rewarded with more coins because you secure the network. So approach is different. One is to reward you because you don't sell, and other one is to reward you because you secure our network, put your tokens at staking. That is a validating system, like proof of work, where you need to mine with your computers to generate new blocks and solve very, very difficult mathematics formulas to solve a block. So I think now the new trend is proof of stake blockchains that are three types. Delegated proof of stake. One is a validator, one is a delegator. I delegate my coins to a validator, so my coins will be voting power in the network. That is all about staking. It's about voting power. The other one is proof of staking with proof of authority. So we have authority upon, it's not a pyramid scheme, but the users are here at the bottom. On top of them, on top, no, it's not really a pyramid scheme, because we have the bottom is the users. On top of them, there is authority that is decentralized. and can use all the users' funds to vote. This is what proof of stake and proof of authority is, and classic proof of stake, that nobody delegates, nobody validates, you just throw your coins in and automatically secure the network. But the best one is delegated proof of stake.
All right. Since the staking and farming concepts were mentioned, Lukas, maybe you can build on top of that. Just telling us a little bit about like the passive income possible to be gained in the Web3 environment.
Yeah, so first of all, I would say that this kind of a staking could even have more different utilities, right? You described two of them, which is really right. But what actually comes up now, especially during this bear market, is real yield, right? How can protocols achieve real yield? And for example, what few protocols do and what we actually are doing is that we allow users to stake and lock their tokens. And for the ones who lock their tokens, we actually pay them real yield. And what is this real yield? It's actually fees that we generate in our protocol, we distribute. So essentially it's a profit sharing, right? We allow everybody who staked and locked our token to participate in the profit distribution of the protocol, right? That's one opportunity what we do. And now building on top of passive income, right? So let's say staking, farming, these are a few possibilities of a passive income, right? And we are speaking now about DeFi, about decentralized finance, where users go to a website, they connect with their decentralized wallet, hot wallet usually, and they participate in decentralized finance protocols. Now, we also have centralized finance, right? So for people who don't have much knowledge about cryptocurrency space, they usually use CeFi protocols. For example, Swissborg, Yield App, or Celsius, right? Which is not available anymore. Basically, they're supposed to manage risk on behalf of you, right? So CeFi actually manages risk on behalf of you. If you're an average investor, you want to have 4, 5, 6% API per year, you don't understand much, you just want to put your money and get some yield, that's a good opportunity to do if you really trust the platform. Another passive income opportunity are trading bots. Trading bots allow you actually to get this upside from the cryptocurrency market because look, the different DeFi protocols, that's fine, but what users, what investors essentially want, they want to get this upside from the crypto market, right? Let's say if you're staking or farming USDC, USDT, what can you expect? Like 5 or 6% a year, right? But what you want to do, you want to get this upside potential of the cryptocurrency market.
Yeah, but this is it's a difference because when you stake a coin, it's guaranteed you get this 5 or even 6% a year. But when you talk about trading bots, 99% of trading bots, in my knowledge, they lose money. So if I put my money on your trading bot, you can lose money. If I stake money, I can lose. It's 5%, and this will be because of the DeFi protocol. So it's a risk. It's a big risk to put money in a trading bot.
Almost
bigger risk than staking.
So it really depends on the trading bot. For example, let's take a super simple trading bot like DCA, right? DCA bot will simply buy cryptocurrencies while they keep on falling, right? So you know how it works, right? It will start buying when the cryptos fall. So it will allow users who usually hold cryptocurrencies to average their entry price, which essentially is good, right?
Yeah, but there are better strategies than DCA.
Definitely, there are better strategies. And let's say on Rosywell, we propose users a better strategy, right? There are also other opportunities. Now, regarding staking, users should also be informed that there are other risks related to staking, right? For example, the protocol can get hacked, right? And the whole liquidity is drained, right? So it's very important to find all the points of failures whenever you're investing in decentralized finance, right? What are the points of failures? Who is actually holding your money, right? Even with the trading bots, if you put your money into an exchange can go broke and you can lose your capital, right? So the safest way is actually to hold your keys to your cryptos in a hot wallet and then look for different investment opportunities.
Better in a cold wallet, in my opinion, because it's not connected to the internet. So
Correct.
At a hot wallet, MetaMask know everybody keys. Ledger, for example, they don't know about your keys.
Correct. That's very correct. And then it's super safe. But then it kind of doesn't allow you to invest money too much. You can then, you're a holder usually, right?
Yeah,
and let's say
true.
what we do at Rosywell, we allow users to connect with their MetaMask. They can deposit money into their MetaMask. They can activate a smart contract, and it's being traded.
That's the problem with the hot wallet, because they can interact with smart contracts that they can have some codes, line of codes that can bankrupt all your hot wallet. Or you can receive a coin, an airdrop, for example, and you look into the coin and you'll try to sell it. You'll engage, you'll interact with the coin. Boom, 3 seconds later, a bot wipe out all your hot wallet because you just press on that coin you receive.
Exactly, and it's all the same topic. It's trust. You must trust the team, you must trust the protocol, and if you're a developer, it's better for you because then you can examine what you're investing in. If not, then you really have to trust and you have to spend time in understanding what you're actually investing in.
Guys, the time is against us. Just closing remarks when it comes to any possible geographical hub which might appear in terms of like having its leading role in terms of Web3. Josipa, if you can mention a bit about that.
Yeah, I think the region has been incredibly strong. I have to say Serbia has definitely led the path here. If you look at all of the global projects that were in one way or another, they either had a big R&D team or they actually had one of the co-founders from Serbia. Projects like Polygon, unfortunately Celsius, but also all of the other really big crypto projects that are based out of the region. Also Slovenia was, essentially a global hub from a regulatory standpoint as well as a developer standpoint in 2017. So now kind of the internal joke is who's next from the former Yugoslavia region. But essentially, really, we have a very big opportunity. The developers are good. The labor costs are fairly cheap. Now the question is, what can we do from a regulatory standpoint to push it further? And I think one of the key playbooks here is what Estonia and Lithuania have done with fintech. So essentially, they made the e-money license very friendly and easy to use. And all of the big companies globally have now opened their HQ in Estonia or Lithuania. Our company is one of those companies. What we're saying to the region is, if you have good developers, if you already have good crypto specialists, why not make one of these countries a regional crypto regulation hub, and why not put it on the map of the world? And so we're hoping that one of the regulators will listen to us, because it's really a short path to become a globally relevant hub.
All right. The time is up, but Mihail, just in a few words, any closing remarks when it comes to our discussion and Web 4.0?
Well, from business perspective, as the technology is changing and the banking gets more evolved, we try to differentiate ourselves from the actual product and to focus on the user experience, And the way that we focus on the user experience is just to have the ability to move money, to store money, and to access credit, So I'm going to summarize everything with one business example. For example, Uber. When they started in USA in the early days of Uber, they had difficulties to find taxi drivers fast enough. So what they did, they made analysis and they discovered that 30% of all applicants of taxi for Uber, 30% of them went to the application, and on a separate field, they leave the application altogether. And that field was the debit card, because all of these people, before they were paid in cash. They never had a bank account in their life. So what Uber did is they used the first principle design and they embedded banking in their system. So what they did is they issued their clients debit cards. So at the end of the day, they increased their taxi drivers for 30%. So Uber didn't even want to be a bank, but they only needed the utility of the bank, so they can embed in their system, so they can grow more. So my final words is that the utility is the number one commodity now that we have to strive in.
Excellent, guys. Thank you very much. Very interesting discussion. Thank you.
Thank you so much. Thank you.
Thank you.